Let's take a call right now. Dorothy in Toronto, go ahead.
Hi, good evening. Thanks,
Hi.
David. A couple of comments you've made tonight are of interest. One is potential opportunity in the mid-cap space, and the second in technology, where you like, there are some have and some have-nots in terms of technology. I'd like your comments on Jabal Circuit, digital manufacturing in that vein. What do you think of that one?
You know, Dorothy, the problem that I have with Jabal is the same problem I had with Celestica, and it's the same problem that I have with many of the others in the contract manufacturing space. The problem is the margins are so darn thin. Mm-hmm. Like their pre-tax margin is about 3%. So if you make a mistake, it costs you a lot, and there's not a lot of opportunity to make a profit. So it's very much a volume game. And I've never really made money in the contract manufacturers.
Right.
So I think that I would prefer to focus on something that has a little bit more intellectual property and a little bit more protected margin. And so Jabal really doesn't fit that bill.
Let's take another caller right now. Philip in Edmonton, go ahead.
Good evening. My question today is on Labrador iron ore royalty income. I remember a few years ago on the program, David recommended the stock when it was in the 30s. And I guess it went down because of the problem with all the materials and so on. Is it a good time to go back and take a position in Labrador iron ore?
Great.
Thank you.
So Philip, you've raised a really interesting company right now. And you know, they call these cyclical for a reason. There's a time to own them when they look expensive, and you buy them when they look cheap,
right?
Because the earnings run up. So one of the interesting things about the whole income trust era that we went through is we wound up with a lot of companies and securities in Canada that were yield generating, but that actually had different kinds of characteristics. And it allows us in the Canadian market to build income portfolios that aren't hostage to interest rates. Mm-hmm. So we can own things like utilities and telcos if we think rates are going lower, or we can own things like Labrador iron ore if you think that rates are going higher, because it's cyclical, right? They get a royalty from the iron ore. So actually, this is a recent purchase for us. We bought it back for the first time in a long time. The stock peaked back in 2010, and really there hasn't been a time to own it since. But I think that in this market, this could be a good holding. So it's a small holding for us to begin with. It's not very liquid, that's the problem. But this could be a good holding if the materials can continue to improve.
Okay, let's take another caller right now. Mark in Toronto, go ahead.
David and Catherine, of course. David, if you could provide your opinion on Brookfield Asset Management, and Catherine, if you could provide the street consensus, I'd really appreciate that. Thank you.
Sure. So look, Brookfield Asset Management is a wonderful company. Very, very strong in managing private assets. It's asset management, but it's in real assets. They've got a really interesting product portfolio. In the very near term, it may be a little bit challenged, just given the fact that people are moving to more cyclical portfolios. Mm-hmm. And so I think Brookfield is being seen a little bit as a source of cash in the short run. As a long-term holding, I think it does just fine. However, you know, it falls into the camp sort of with the REITs. And so in that vein, you may have some technical headwinds in the very short run. Really well-managed company, really good assets. Just in the near term, there might be better places for new money.
Okay. In terms of the analyst
We do own the stock, by the way.
Okay. But an underweight position?
Yeah, we wouldn't be adding here, and it may be a source of cash.
Okay. Analysts who rate the stock, 70% do rate it a buy, 30% rate it a hold. There's no sells on the stock. Average price target is $40.56, so quite a bit of upside from here. And then in terms of the range on the street, you've got let's see here, Credit Suisse with $35 on the lower side, and then on the higher side, you've got $47. That's over at TD, with the majority of the analysts having the price target around that $40 mark. All right, we're going to be back with David Burrows. He's President and Chief Investment Officer, Strategist, I should say, at Barometer Capital Management, answering questions about North American large cap companies. You can call us toll free, 1-855-326-6266.